Morning guys, Joel Frank here, market analyst for YouTrading, and this morning we're taking a quick look at spot gold prices because things have been quite eventful in the last couple of days. Finally, I don't know if you remember over the last couple of weeks, but we've been talking about how boring gold has been. So let's take a look at the chart and we can kind of talk it through. I've got spot gold prices here on daily candlesticks, and as you can see, let me just highlight this area. For a couple of weeks, pretty much from the start of July all the way through mid-July into early August, we were stuck in this really boring range where we were not going below 117.90 and failing to get above 118.30. And this was pretty much as gold was just awaiting further fundamental catalysts, pretty much like the next NFP number and further rhetoric from Fed members and like the next FOMC meeting. In the end, the catalyst for the break below that range that I just drew up was last Friday's non-farm payrolls report. You can see that was the big candlestick there that took it below this range. We fell all the way. Oops, that hasn't worked properly. We fell all the way to the I think that's the end of June low at 117.50. But then things got even more eventful on Monday. There wasn't any fresh catalysts to drive this, but perhaps thin liquidity conditions. I think Japanese market participants were away on holiday. It's the summer months as well, so it is generally thin liquidity anyway. But we saw this seemingly break of stop losses below 117.50, and we had this violent move during the overnight session on Monday all the way down to pretty much test when was this? Q1 and start of Q2 lows around 117.70, or just to the south of 117.80, sorry. But we have rebounded from there. But let me just show you guys on a 4-hour candle actually. Gold prices have failed to break back above 117.50. Can you see that failure, that rejection there of the 117.50 mark? That, for a lot of technicians, is a bearish sign. A sign that gold is most likely to continue to move to the south. So I think as long as the US dollar continues to strengthen and US yields continue to move higher, which I think seems likely because not only was that NFP data very, very strong, but we've also had FOMC policymakers speaking recently and sounding broadly more hawkish. And we've also got US CPI inflation data out on Wednesday this week as well, which could be higher than expected. And all of that could contribute to further US dollar strength, further upside in US bond yields, and that would imply that gold can continue to fall back to another test of this 116.80 area. But for now, this is your range that you need to look out for, okay? So the top side of the range, 117.50, bottom side of the range, 116.80. And as I've just said, I think there's going to be a downside bias within this range for now. So anyway, guys, hope you enjoyed the video. Hope it was informative, and I'll see you all in the next one.